So tell us a little bit about your investing strategy. I know you're thinking maybe it's time to look at rotating into bonds.
It depends on the evolvement of the inflation dynamics. Currently, we are positive on European investment grade bonds because valuation is good according to our investment managers. Fundamentals are not bad because we believe that the default rates in the corporate sector, IG, is all priced in. But then that view can change if the recessionary risk mounts quickly. Then they may warrant to go back to sovereign bonds because that would be the shelter that everybody goes into when we get an inflation down the road.
Qi, on China, we saw ADRs jumping today, and perhaps the expectation that those protests, that COVID-0 strategies will actually lead to more easing coming from policymakers. Why is that important to markets when at the same time we're hearing the narrative that it doesn't matter how many RRR cuts the PBOC does, if you don't get rid of COVID-0, there really is no upside to the economy that's sustainable?
Well, that's true because the zero COVID policy is number one drag on the economy, and number two drag is the property market. Now, over the past few weeks, we've seen policy announcement and actually policy actions by the Beijing authorities to sort of manage and address the property market problem. So that I think that is likely to stabilize the property market. The biggest uncertainty now is the COVID policy. Now, Beijing announced that it would relax the COVID policy, in the future. It didn't really say when, and the market is guessing when. And then now we see all these protests and the surging COVID cases in China. So that creates a lot of uncertainty or even suspicion about whether Beijing will exit from COVID policy even by the middle of next year. Now, we still think that there's a fair chance that China will relax further the zero COVID policy, if not completely exit yet, by the middle of next year, if not earlier. Now, the process that we see, I think it's a pressure on the government to move on.
Just quickly, when you're looking at potential political turmoil in the country, do you worry about that in your investments in China, that this could lead to something worse, a really massive violent crackdown?
Well, if we have evidence or we have projections that the protests or the unrest will lead to, will threaten the economic fundamentals and also the political fundamentals of the market, I would worry. But there's no evidence that these protests that we see in China, although they are all on the headlines every day these days, I still think that these are short-term noises.